Welcome to Gold Silver Pros.
Hey everybody, this is Rob Kientz with 𝘲𝙀𝙀 and we are recording this at about 5 p.m. Central Time on Monday the 13th. You guys should see it on the channel just after we record it. And we're bringing Ian Everard back on to do the weekly metals update. But before we get into that, Ian, we wanted to talk to you about what's going on. Obviously, at the end of last week and over the weekend, a lot of news emerging around these bank failures. We think that there are 3 that have gone out, and then it looks as though that there's a lot of worry about small regional banks in the system as well, and potential for some of those to get gobbled up by the big guys. So just a lot of stuff going on, Ian. First of all, how are you today?
I'm good, thanks, Rob. It's always good to see you.
So talk to us about the banks. We had SVP, we had Signature Bank. I think we had another one. What's going on there? It looks like the Fed is stepping in, and it looks like we may be at the start of some sort of bank run.
Yeah, I mean, it looks like from all the signs so far, the FDIC are going to make all depositors whole. And they've probably got enough dollars in their reserves to do that. But that's going to drain their tanks. And I think the bigger question is, and as the FDIC have always said, well, if we run out of money, we're backed by the federal government. Well, the federal government hasn't got any dollars. They would just have to create them and sell some debt to somebody. But no one's buying US debt, or not as many people as, the Fed's supposed to be selling it. China's selling it. Japan's selling it. I guess there's some, what's the word for somebody who's, some bag holders are buying it, I guess.
Yeah.
So
well, it looks like the bag holders here, Ian, are going to be depositors, because what the Treasury Secretary Yellen came out and announced this weekend was they were going to simply pass on the costs in forms of rates to the remaining banks in the system. And from what I know, those banks are simply going to pass those costs on to their customers, because customers are going to pay for the bank's costs. So isn't this in a way the Treasury and the Fed basically passing these costs of these failed banks on to the public instead of the government really doing anything themselves?
Yeah, but the government's not in a position to do anything anyway, are they? I mean, they're not even really good at inspiring confidence, let alone actually practically. I mean, the whole level of government, from what I see, is pretty incompetent. I mean, if their idea of fighting inflation is to cause some inflation to fight inflation, it's passing the costs on is another tax on the American population, which is going to affect the economy. If you're paying a tax to bail out some depositor on another bank, it's, well, I don't know, it's not equitable, is it? For sure.
Yeah.
So, say you've decided to put your deposits into a lesser known bank because they give you a higher interest rate. I mean, like Credit Suisse, what they're offering Asian clients, 7% for 2 million plus deposits. Yet they're charging less on loans. So it's hardly sustainable, is it? Charging everybody else for the riskier banks that maybe will have to start paying a higher interest rate to attract or retain depositors.
Yeah, and it seems as though, as I'm looking at the response of the market to this, people do not want to use that Fed discount window. People are afraid to use it. Some of the banks that are associated with the FHLB, which is the regional federal home loan banking system, and this came about as a result of Federal Home Loan Bank Act, which was passed in 1932 as a Depression era act that was supporting, it was to encourage homeownership and support banks that were giving out mortgage loans for low-cost mortgage funds. That's still in effect. And there were a bunch of regional banks that had basically applied for $64 billion of credit over the weekend in this system instead of going to the discount window. And the reason, I'm going to put up a map here so people can see, and the reason that they're doing this is simply because if people go the discount window, then everybody knows you're in trouble. Yeah. And so I feel like everybody's trying to go the back way and not admit that we have a big issue. The Treasury and the Fed, backstopping, the FDIC and, taking over these banks and things like that. And then other banks going outside the discount window using this system to get liquidity. First of all, it tells us a couple of things. One, it tells us a lot of the regional banks may be in trouble because they're getting liquidity right now in anticipation of customers taking out deposits, which is what happened at Signature. The second bank failure was customers taking out 10 billion in deposits. And so it looks like there's this sort of flight to liquidity. They got to shove a bunch of liquidity in the system. And Ian, they're doing that because these banks have loaned out all the money. It's out in the market, and a lot of it got destroyed. A lot of value got destroyed last year. Look at the stock market downturn. Look at the rise in interest rates on the bonds. And so all those things are negative for assets that a lot of these banks may have invested in. So they can't just sell their assets and call them back. They'll take losses. So instead, they're going out for liquidity. Well, what does that mean? It means the system has to shove a bunch more money in the system. So is that sustainable? Is that, are we going to be able to just shove enough money at the system to where this will go away?
Maybe, maybe for a while.
Yeah.
It's keeping that public perception that, okay, this is not good, but no one's really got hurt. Only the shareholders have lost out. But not really. I mean, the whole system hasn't got enough real wealth to equal the dollar denominated wealth. It's back to the whole fundamental issue. There's not enough real things at current prices to equal a number of dollars. There's not enough physical dollars to equal a number of digital dollars,
right?
Either. So the bank runs, physical bank runs. Well, I mean, was it last week there was probably 2 trillion physical dollars in the banks? Probably by the end of this week there'll be $1.5 trillion, and it must be impossible to print up physically and distribute to the banks that quickly. And somebody told me early last week, that they stopped printing $100 bills in 2017, 2018. Okay, so they're not creating large denominations, because if you're going to flood the banks with physical cash to stem a run, surely it'd be $100 bills. I mean, 50s and 20s are just going to there's not going to be enough trucks to deliver them, is there?
Yeah, it just seems as though we're in some sort of liquidity event, and I'm waiting for something to break in the repo market. Because usually last time before we got the big crash in 2008, there was an issue in the repo market. A couple of years, we had another issue in the repo market, and the Fed stepped in and started dumping some short-term treasuries in there to help out. I'm waiting for the repo market to blow up again, because that's where a lot of these businesses fund their overnight. And if they need liquidity, I'm sure a lot of them are going to go there. Maybe it's after people, go after these other sources that we begin to see it in the repo market, if it's contagion. If it's contagion, I think it would show up there, but we'll have to see what happens. But turning the page and moving to the precious metals, we had a spike in precious metals prices, Ian, which is good news right now as we record this. And I'm not getting my prices. Let me go over here. Gold's at about $19.16, and silver's about almost $22 at $21.92. We had a nice little bump there. What's your view on that? Are people ordering a lot more gold and silver right now?
I had some savvy clients ordered before 4 p.m. yesterday. They must have had a hunch. Saw a lot of hedge fund money move out of theoretical Fugazi wealth into physical. So that was interesting. Okay. Is this going to be a sign? Is this going to be a sign of the financial elites, the leading financiers, whatever you want to call them? They're tipping off their friends and family, so they'll move into the metals. Have they got a plan to do that in an organized way so it doesn't? I mean, basically, they want to give us little notice when they know the game is up. They still want people to think everything's okay. They still want everybody on the Titanic not fighting for a lifeboat. And we know there's nowhere near enough lifeboats for the situation we're in, for sure.
Yeah, I have a feeling it's going to be tough times for a lot of people. A lot of people don't have extra money in their bank account. Outside the precious metals, it really kind of scares me a little bit how this is going to hurt people. And over the weekend, I'm flying home from LA, and I mean, the chatter on the plane, the chatter in the restaurants as I'm flying back, nobody's talking about this at all. Like the general public, even though we just had the second and third largest bank failures in U.S. history occur at the same time, one in the tech space, one in the crypto space, a part of tech, doesn't seem to be alarming people that much. Nobody's really talking about it. So there seems to be a delayed reaction. I do know that people are pulling their money out of banks, but it's the minority of people. What happens if, say, half of Americans all of a sudden decide to go over to the bank and withdraw an extra $1,000 or $500 just to be on the safe side, what happens to that liquidity in the system? Do we have enough money for that?
Well, we definitely don't have the physical dollars. So there's no other way of how else do you get your money out, your cash out, the fiat cash out of the bank? All you can do is move it to another digital store somewhere. So at the moment, it's pretty well all digitally stored. And it's been that way, really, if you think about it, Rob, since we went to checking accounts. I mean, yes, it wasn't digital, but it was ledgers. It never actually existed. So we've been conditioned to think that this stuff is real. You know, I mean, that's a £10 UK note. I grew up all my life thinking this was an amazing thing, you know, and it's a lie, isn't it? Really, at the end of the day, it's no store of value. Fundamentally, what we're told is money is not money.
It's not, and I'm just doing some quick math here. $2 trillion of cash in the system. That doesn't count what people have out of that, what they have hidden in their mattresses and their wallets. But let's just assume you can get a full 2 trillion, which is not, probably something closer to 1.5. If you divided that by 331 million people in the United States, it's about $6,000 a person. That's all the cash floating around. So let's make a comparison there. $6,000 a person, but what about all the money that went out on my mortgage? Say I have a $200,000 mortgage. Well, that $6,000 per person doesn't cover $200,000 mortgage or my $50,000 vehicle.
No.
So what happens when people have to start paying those off? There's not enough cash, and they're not even remotely enough cash in the system, is there?
No. It doesn't cover a fairly comprehensive service and new tires and brakes on your truck, does it, Rob?
No, because that's what I just paid. And I paid several thousand.
You can spend 5,000 to 6,000. I mean, a minor ding, a minor traffic collision, and that's $10,000 in the body shop. It just to putting real things in perspective. Real things are incredibly cheap at the moment.
They are incredibly cheap. I just had a taillight break on my truck, and that's a couple $100 to do that, of course, because supply chain issues. The other thing is supply chain issues. A lot of items are going up. I was thinking about selling some of my equipment because all my cameras and things that I bought are now worth more than when I bought them 3 years ago. That's odd. I bought consumer electronics now have gone up in value over 3 years. So yeah, physical things are really in shortage. There's more paper stuff in the system than physical things, and physical items are going up in price because we don't have enough physical items that people need. And I think that extends to the precious metals as well. I have a feeling there's not near enough precious metals in the system, Ian.
No, absolutely not. I mean, if you can get a relatively minor increase, I mean, what have we got? We've gone up $1.30 from the open on silver, and then suddenly I've got wholesalers who've turned off their online trading platforms. So you have to call them and discuss what you want to buy now. You've got somebody online.
Well, you've had wholesalers that you have to now call.
Well, yeah.
Are they arbitraging it because there's potentially a shortage, do you think?
It depends whether they like you or not, what price you get now.
Oh, better be friendly with your wholesaler then.
If you've been loyal and stuck with them and maybe paid a little bit more sometimes and you could have got it elsewhere, and you're polite and you're friendly, and I try to meet all of my suppliers personally, I think that goes a long way to making sure you get some continuity of supply. You know, I've heard, well, it's not anecdotally, I've heard firsthand that some of the big companies will switch wholesalers to save a penny an ounce. You know, so I think that could come back to roost, that the wholesaler is going to look after the people who've looked after them and are pleasant to them. And I think I said maybe 6 months, a year ago on your show, Rob, I said, get to know your precious metal dealer, make him your friend. So same as you need a farmer, and you need a mechanic, find these people in your lives and be a genuine friend to them. And I think
we may be going back into that time in which, isn't that the way America used to work before everything was online and everything was impersonal? And on a computer or a phone, didn't it have to do with somebody you knew down the street who was the mechanic, and if you were in good shape with them, they would help you, and sometimes you would help them, right? Maybe you had something they wanted, maybe you helped them out when they need it, and that's just the way relationships are.
That's the vision of sort of 50s America, isn't it?
Well, I think that world was a better place because it facilitated human relationships, and what what do humans love? You know, we're herd animals. We like to be around other people. And, you know, that's just kind of that's the way old school America was run. And we may be going back to that. And I don't think these new generations understand it. If it's not on their phone, they don't get it. You know, they don't know how
Yeah.
to form that relationship, and it's going to be harder. People that are used to Amazon delivering their goods to the door may have to get used to something else.
Might have
Not
to
only
talk to
will
some.
they,
Yeah. Yeah.
because Amazon Ian's already canceled their 2-day free shipping on Prime. So all those people that
Yeah.
signed up for Amazon for Prime membership may be
Yeah.
going, okay, now I can't just get my easy stuff. And
Yeah.
I gasp, they may actually have to go find a store and buy something. And if the store doesn't have it, what do? You go to individuals. Individuals are going to make the stuff that you need, are going to fix your car, you know, going to unclog your toilet, that kind of stuff.
Yeah. But it'll be a better world, and
Mhm.
and piece by piece, I think I see it happening, and it seems to be in the precious metals community. It attracts people that actually want to look out and help other people.
Mhm.
You know, a lot of the motivation from a lot of my clients is to look after not even just their relatives, but look after their neighbors and
Mhm.
help, you know, bring stability to their community if we do get a real crunch where the dollar isn't the preferred choice of trading.
Yeah, I agree with you. So maybe some rationing going on at the wholesale level, it sounds like. We've had some price spikes on retail at various online precious metals. I know it was it 8% premium that was posted on Twitter on APMEX for some Eagles, and I think gold Eagles, don't quote me on that, but I think it was between 7 and 8% this weekend. And I remember, Ian, when you could get gold Eagles for 3% on American Eagles and maybe, you know, 1.5 to 2.5% on some of the generics. 8%, here we go. We got premiums again, and people are going to complain. Premiums. Explain to people where the premiums come from, because doesn't it start at the point at which the metal comes off the mill and it's going to the wholesaler? Isn't that the point at which we start charging premium? Because now you got the gold or silver out of the ground. Now you got to ship it. The wholesaler's got to take it. They got to distribute it out. Is that where the premiums come from?
Well, no, really, the premium starts before that, Rob. The premium
Okay.
starts from the mints actually getting access to their metal.
Okay.
We mentioned a while back that a lot of the European major mints were sourcing 1,000-ounce silver bars from the COMEX and shipping them to Europe to make silver products. And that was because they couldn't get supply at a reasonable price direct from the refineries. So to me, that suggests that the COMEX price is an artificially suppressed price. It's bearing less and less connection to reality. So there's pre-costs before it gets to the mint. Then the mint have got their manufacturing costs and their profit costs. Then the product will go to a primary wholesaler, or sometimes straight to a retailer who is big enough to buy straight from the mints.
Yeah.
And then quite often a product will go to secondary wholesalers who, you know, I mean, so some of the system works well, but generally it always seems to be when the spot rises rapidly, the premiums rise even faster as a percentage.
Mm-hmm.
And normally when spot falls, the premiums go up as well. It seems to be whatever happens, the retail public gets done over by the system. So I think we need some more primary wholesalers. We need some genuine competition. I am concerned. The little bit of research I've done, there seems to be monopolies growing in the precious metals, you know, before it gets to retail, and that is never healthy for competition.
No, it's not. And I want to talk about supplies here in the system for a moment. So I'm going to go to a share screen and just bring up a couple of artifacts. This is the CME Groups who basically runs those markets. It is their metals report on what they've delivered, and this is basically this month. So we got their clearing month to date delivery notices on the metals. Here's the metals group, and I'm going to scroll down here to silver. I'm going to narrate for people who have small eyes like me. We start off the month with robust 1,233 deliveries of 5,000-ounce silver on COMEX, and it's kind of dwindled because this is not a big contract month. If you look at silver, the big contracts are in May. It's a futures market. So there's not a lot of deliveries you can get here. So what happened was there've been a lot of deliveries in the EFPs. 850 contracts that EFPs went over. If you look at gold, here's how much went over to London on Friday, Ian. 6,466 contracts. EFP. That means that people can't source because this is not the biggest delivery month. There's not a lot of contracts left, only 77. And it's all here. And you can only get deliveries on COMEX the active month. So people can't get deliveries in this market. It's not liquid. There's no contract trade. May is the next big month. So what happens is they go, over to London and they grab it there through exchange for physical. And not only was it Friday, if you look at Thursday, they had 1784. If you look at Wednesday, they had 4,079. If you look at Tuesday, 4,453. So last week, the demand for metals was so explosive as all of this is going down, and the metals aren't on COMEX right now because we're not in a big active trading month. We're in a medium-sized one that's already traded out. All the contracts are traded out. Because to get physical, you have to exchange the paper contract, right? Here's my paper contract, please, sir. Can I have my physical? Well, March, there's not a lot of paper contracts, so they can't go, hey, sir, on COMEX, I need my physical. So as people are panicking, they're going overseas to London. And so there's robust demand. And if we bring in Shanghai, this is the Shanghai market. This is in China, Shanghai Gold Exchange. Click on data and go to the monthly report here. And I go all the way to the bottom and look at the delivery ratio in the past month. This is the physical delivery. 73.53% of contracts in Shanghai were physically delivered in February. 21.3% in silver. Now that's way above. Shanghai is a big physical delivery month, Ian, but that's way above even Shanghai's averages. That's 2 to 3 times the average you can typically see in China. So I think the Chinese started taking delivery last month ahead of time because I think China knows what's coming. And I think the Chinese people are smart. They know there's issues in the system. And what do they go to? They go to real estate and gold and silver is where the Chinese, typically hold their money. It's the, those markets. And now we're starting to see people in the West, but they can't grab it off of COMEX. So like, oh crap, I need it. So let me go over here to London. So anywhere that you can get gold on the big industrial markets, it's being taken up. People are taking it up. So I expect that just to continue because of the bank runs, because the bank runs are going to scare people. Now, what happens if the rest of the gold and silver on COMEX start to get taken up? Where do people go, or where can they go?
Well, there isn't anywhere, Rob, because what's in the retail system is tiny. I mean, it's days supply. It's not much more than a few days supply at normal trading levels, maybe a week. I mean, I'm sure a few of the larger retailers have reasonable stocks, but with the irrational suppression and whacking around at a price, it gets expensive holding stocks, whichever way they're moving, because hedging costs must start to eat into margins pretty rapidly, and storage costs and insurance. So it's a very, very thin market. And we often hear Andy Shetman numerous times, he says it's an incredibly thin market, what's available at any one time. And it just relies on almost a just-in-time supply. I mean, we tend to keep a lot more than we sell in a week or a month. So proportionally, we are really heavily stocked. But the main reason for that, I'm personally convinced that it's the only safe way to store wealth. And I don't want to get caught. I'd rather be 5 years early than 1 day late.
I agree with you. And I'm so glad I did this ahead of time. I'm so glad I wrote the book back in 2009. I'm so glad I got invested. And I'm just sitting here, just waiting. And I know a lot of people aren't though. So a lot of people maybe just coming into this, they're, oh my God, we've seen the bank failures last week and they've been thinking about it for maybe a few months or a year. And now they want to pull the trigger. So the best way to pull that trigger and to get access to deals would be to go to our website, goldsilverpros.com, goldsilverpros.com. And if you scroll about halfway in the middle and you click on this button right here for ARK, it gives you this nice little form you can fill out, Ian, and they'll send that information over to you. And tell us what you have what you've got going on. What kind of stock do you have available for silver and gold if people are interested?
It's relatively healthy, but we can only sell as we can replace. So yeah, we do have Maples, Britannias. We have the full silverback precious metals range. We have kilo bars. We have Krugerrands. What else have we got? We got some Germania. We're in the process of updating, but every time I start to update the price list, I have to update it again and again and again. So it's getting a bit frustrating. But we are going to do our best to minimize our premium rises. So we're going to sort of meet in the middle between the inventory we hold, the premiums we've paid on it, and the premiums we've got to pay to replace it. we're not going to pass on the full increase as long as we can.
Well, that's very nice. Thank you, Ian, for doing that. I know you have a track record of providing gold and silver, and especially silver, a lot cheaper than most people. We've seen you $2, $3 an ounce cheaper a lot of times. So I know you're having to go right now to kind of like an availability pricing model where it depends on if it's available and what you can get it at. Yeah. But you will give a break on the premium compared to what other people would be if you're going to one of these other big box, online guys. So everybody keep that.
Ironically, Rob, often I can give a better price for a small order because I really think the people who can only afford a small order deserve the best pricing. Mm-hmm. Sometimes if people want to order a lot, it's gonna I mean, we'll still be probably the best price in North America, but it won't be as cheap if you're ordering a small amount.
Because it's hard to get it, it's hard to source it. You may have to go to 5 or 6 different places, and
to guarantee that supply. So I'm hoping things calm down, and I hope it doesn't go as crazy as it did in the silver squeeze 2 years ago. But I think we're on a 50-50 balance where we're actually run out of product for retail. I think it's gonna be that tight. And I'll quote Lynette Zhang, she'd always be saying, "Get it done." Well, don't wait. It's like, because there's going to be 9 out of 10 people who've been thinking about, okay, maybe I should do a little bit. Maybe maybe my neighbor's not crazy talking about this all the time. Maybe I should. And then you never get around to doing it, and then suddenly it's gone. And again, I love quoting. I mean, Mike Maloney is a hero of mine and probably of yours, isn't he? I mean,
Yep.
Unobtainium and unaffordium. Suddenly,
that's where it's going to go for sure. Yeah, I think it is. All right, Ian, we're going to go ahead and wrap this one up. Thank you so much for the update on the metals. Looks like retail supply is getting cheap. Looks like the wholesalers may be rationing just a bit. And as we realize there's problems in the banking system and not enough cash floating around that everybody's going to need when the system goes up, the best thing to do may be to go to precious metals. And when that dollar system freezes, at least you'll have something of value. At the very least, you could barter it for something else if you needed to. Thank you, Ian, for joining the program. We appreciate it.
And one more thing, Rob, and at least if maybe you've happened to come across this program for the first time and you think these guys are absolutely crazy what they're talking about, just put 1/8 of what you would like to, what you consider cash. Just put 1/8 of your rainy day fund. It's going to serve you well.
It'll definitely serve you well than cash in the bank, which you may not be able to get even 1/8 of by the time it's all set.
Exactly.
You may get 1,000th of, or you may get nothing.
Yeah.
All right. Thank you so much, Ian. We appreciate your time.
Thank you, Rob.